Hello and welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks with in-depth analysis. We deep dive into financials, and we also tell you about the key risks and triggers going forward. Well, let's get straight to the first stock today. My colleague Sonal gets us a very special deep dive into Galaxy Surfactants.
The investor interest in specialty chemical space is not hidden. Growth prospects are huge here. However, not every specialty chemical company is the same. The industry derives its growth from the underlying growth in user industry, and while it has many sub-segments, we'll focus on what is called the oleochemical space and speak to a leader in this industry, Galaxy Surfactants. Now the company, it is engaged in manufacturing of surfactants and specialty care ingredients and focuses on home and personal care industry. Company has a portfolio of over 220 products and it has two segments: performance surfactants, which largely caters to FMCG companies and 61% of revenues, and specialty care products, which caters to skincare segment and is 39% of total revenues. Performance surfactants are large volume consumption products and specialty are niche and low volume products. So that is the differentiation. Company manufactures products which is used in hair care products like shampoos, oral care like toothpaste, home care like carpet cleaner, skin care like sunscreen, cosmetics like nail paints, and toiletries like hand washes. Now for oleochemicals, the difference versus any other chemical is that they are derived from vegetable oils or animal fats versus crude oil derivatives used by, say, petrochemicals. Galaxy Surfactants uses fatty alcohol as its raw material. Now, company has a sizable chunk of revenues coming from exports and caters to geographies like Africa, Middle East, Turkey and rest of the world as well. Let's talk about Galaxy's financials. Revenues of 3684 crore rupees in FY22, which is a jump from pre-COVID levels of 2761 crore rupees. Margins, however, have been under pressure after increasing from 14 to 16% in FY20, have come down to 11% in FY22, and profits have, after seeing a sharp increase in FY21, come down in FY22. Demand side concerns have been ailing the company and hence the stock. It's time to understand this business, what is the supply chain like, also what will drive growth from here. We'll now speak to the management of the company. Let's go. At this plant, which is 25 years old for Galaxy Surfactants, and safety is of prior importance here. And we have with us Mr. U Shekhar, who is the Managing Director and Promoter of the company. Mr. Shekhar, thank you so much for joining us in CNBC-TV18 and on Inside Out to explain your business. It's a pleasure to have you here. And as the motto of this show is to explain to our viewers what the business is. So I just wanted to understand oleochemicals, that is what your product largely is. Explain to us the supply chain, what do you exactly make, and what is the supply chain in terms of raw material looking like?
So the word oleo means oil. So oleochemicals are those chemicals which have primarily vegetable oil as their raw materials. So our chemicals are based on fatty alcohols and fatty acids, which are primarily derived from palm kernel oil and coconut oil, which are grown in significant quantities in Malaysia and Indonesia. So we have our raw materials coming from these countries, as well as we procure them locally with manufacturers such as VVF, Vegetable Vitamins and Foods, Cottage Industries, Adani Wilmar, and so on. Some of oleochemicals are those chemicals which are derived from vegetable oils, and these vegetable raw materials, that is fatty alcohols and fatty acids, constitute almost 60% of our raw material requirements.
So let's talk about your customers now, FMCG companies. In fact, Galaxy, I read somewhere, is also called a pseudo FMCG company because you actually supply products to those companies. 220 products, around 1,400 customers. Are these long-term contracts? And post-COVID, what has the experience been? How have you changed the way you look at, customers? How have contracts changed over time?
Okay, see, you may not necessarily call them contracts in the legal sense, but all our relationship with customers are long-term. All our customers are long-term. We have relationship with customers which are maybe 10 years old, which are 40 years old, which are 25 years old. So we have certainly long-term understandings and long-term arrangements that with these customers. As we always say, we have grown with customers through the country's growth as well as this category's growth. See, we are a company who are totally devoted to the personal and home care industry. So all these relationships that we have with these customers are long-term. Okay, so we do have understandings and arrangements, and there is a language that is understood between us with respect to prices or raw material change in prices. So particularly during COVID times, where we experienced a high level of volatility, our periods of understanding used to be a small periods, maybe even as small as a month or 2 months. Of course, now that the raw materials have stabilized, we can talk about understandings or arrangements of 3 months, 6 months, or even 9 months. Okay, but what is uppermost in our mind is how to ensure that our customers' interests are protected. So we do engage with our customers and tell them what is the right period to commit oneself with respect to period contracts.
I wanted to understand about the China Plus One theme that everyone talks about. Is it something that impacts you as well? Something that happens in China and then it impacts your company? And also the new Europe Plus One theme, whatever is happening in Europe, how is that impacting your company?
See, China has not been a very significant factor for us, whether it is in India or in the markets that we operate. China is obviously a very big market. Chinese manufacturers more or less fulfill the entire requirements of the China requirement. We also supply a number of special products to the Chinese market. But the Chinese presence or play in the various markets is very limited, at least as far as we are concerned, whether it is the Middle East market or the European market or the US market. Galaxy, as you know, exports almost 2/3, or what I call 2/3 of our turnover comes from international business, and 1/3 just comes from India. So China Plus One is not a significant factor as far as we are concerned. Yes, Europe, whatever is happening in the context of the Ukraine war and the threat or the reality of gas shutoff is suddenly going to impact Europe, the European industry, because as you know, the preference for gas supply is to common consumers. The industry comes second or behind. But I do believe that Europe, having already stored 87% of its gas requirements for the year, I think will manage and pass through. But if ever an opportunity arises, Galaxy is very well prepared with the capacity that it has built for itself.
Okay, so you spoke about how exports is a big contributor to overall revenues, 2/3. Are margins higher there? And generally, last conversations that we have generally in quarterly numbers as well, Europe, Turkey had been struggling a bit. So in the longer term frame, what is the outlook on exports for you? Will it continue to share, enjoy a higher share in your revenues?
See, at least for the last maybe about 7 or 8 years, the share of international business has more or less remained in the region of 66 to 68%, and we expect that to continue because Indian market grow at about 7 to 8%. Of course, leave out the COVID times, and the international market, particularly the developed markets, grow at about maybe 2 to 3% or so. So, in terms of our growth, the international markets, particularly US and Europe, is where who are more receptive to the new innovations, the specialty innovations, which are premium in nature. India, of course, today with the emergence of the D2DC direct-to-consumer companies as well as the e-commerce companies, has started significantly using the specialty products. But for us, India still remains a country which has a huge opportunity in terms of penetration, whether it is hand soaps or household cleaners. And say shampoos have had a decent amount of penetration, the toothpaste have had a decent amount of penetration, but household products, home care products have still a significant amount of penetration left. If you even talk about, let us say, liquid detergents, there is a good amount of opportunity and potential going forward.
So is there a margin difference between the two markets, or is it the same for you?
See, ours is the market is a global market, okay? So it's pretty open, and so there cannot be much of differentiation in terms of prices between a local market or an international market, okay? The only add-ons will be the logistics cost with respect to specific markets. But otherwise, there is openness with respect to pricing across various regions and various geographies.
Okay, all right. So I wanted to speak to you about your two segments, performance and specialty chemicals. Specialty being more niche, lower volume product. Going forward, will you see more contribution coming in from specialty?
See, the share of specialties will increase over the longer term. But the performance products will continue to grow in those markets which are still under-penetrated. For example, I did tell you, as far as India is concerned, we are still under-penetrated with respect to washing machine detergents, hand wash, household cleaners, other home care products. Specialty products are niche products. They will continue to make inroads, not just in developed market, but also in developing markets or emerging markets, as we say. But that will happen, gradually. Okay, and Galaxy has been at the forefront with respect to innovation of these specialty products, whether it is to do with mild surfactants or non-toxic preservatives or vegetable proteins or multifunctional ingredients. As you know, the consumer, worldwide is moving more and more towards sustainable products, more and more towards mild products, more and more towards more safety. And he also seeks ingredients which are simple, simple chemistry rather than complex, chemistry. And Galaxy has been, significantly innovating at the cutting edge in the last 10 to 12 years. As you know, specialty revenue for us has almost gone up, or has almost been multiplied by 6 times over the last 10 years. So that tells you that how we have innovated in response to the various consumer and market needs. But also we have created and built markets. And these products, in terms of regulatory compliances as well as the compliance requirements of customers do take time.
When you talk about innovation, a lot of R&D expenditure would go into that. India is known to be, on the lower side when it comes to R&D expenses by the chemical companies. What is it for you? And say years down the line, how much could that go up to? And that ultimately will, of course, have some impact on margins. So EBITDA per ton at 25,000 in Q1. I'm not asking you an immediate outlook on that, but what is the long-term target that you have here?
As I told you, we have been at the forefront of innovations for this personal home care industry, whether it is to do with mild surfactants or non-toxic preservatives, or vegetable proteins, or even multifunctional products. And all of these have been developed in-house. As you know, we today have over 70 US patents, and most of these patents have come in the last 10 years or so. So innovation is a very, very important driver as far as our growth is concerned. See, with respect to EBITDA per ton, we started with a guidance of 15 to 17 rupees maybe 3-4 years back. Today we are talking about 17 to 19. So it will progressively grow up as the share of specialty ingredients in our overall portfolio, keeps growing.
Expansion plans, you have already big manufacturing capacity in place. How much can you increase it to? And if it does happen, what will it mean for your revenues? What kind of capex plans do you have going forward? And how will you fund it?
See, at least in the last 3 or 4 years, we have incurred a capex of 100 to 150 crores every year. And this will continue to be there over the next 3 or 4 years as concerned. We have continuously increased or debottlenecked our capacity, whether it is in Egypt or in Jagadia. We have acquired a new piece of land in Jagadia where our further expansions will happen. We do have some space or land available in the existing Jagadia locations. We also implemented a very major R&D pilot plant project in Tarapur, which will enable us to scale up our innovations which happen at the laboratory level very well. As you would have seen, our capacity utilizations today are in the region of approximately 65%. I think as soon as the capacity utilizations reach maybe, let us say 75 or 80%, we start thinking about the need to increase capacities.
So just one number I need to know on a yearly basis, what is the long-term CAGR that you're working with for revenue growth?
See, the last 10 years, we have multiplied our volumes by 3 times. Specialty revenue, as I said, multiplied by 6 times. Our PAT multiplied by about 5 times. So that tells you, okay, the direction that we want to take as we go to the future.
All right, so big plans in place. That is all about Galaxy Surfactants. Mr. Shekhar, it was a pleasure speaking with you, sir. Thank you so much for joining us here. All about Galaxy Surfactants on Inside Out.
All right, that was a deep dive into Galaxy Surfactants. But time to slip into a short break. We'll come back with another interesting stock. NMDC is in focus on our Spotlight segment.
अरे सिर्फ 19,000